The standoff between President Trump and Fed Reserve Governor Lisa Cook could have enormous implications for Fed governance, financial markets, and the commander-in-chief's influence over monetary policy. Let's bring in now Loretta Mester, Cleveland Federal Reserve former president and adjunct professor of finance at the Wharton School. Loretta, great to see you as always. So Trump saying he's going to fire Cook. Cook is firing right back, Loretta, as you saw. She says she's not going anywhere. Here's what the economist Claudia Sahm posted on X, Loretta. I'll read it to you. Claudia saying, "Do not forget, it's about control of the Fed. This is a very dark day." Do you agree with that, Loretta?
Well, I think it is an indication of how President Trump does want to take control of monetary policy. And, this is just another step along the way. It's a very aggressive step. It is more than just about Governor Cook, right? It's really about, can the Fed run an independent monetary policy without political influence? And what we're seeing is that that's what's at jeopardy here. And that would be so unfortunate because of the importance of having an independently set monetary policy. And I just want to say, independently set monetary policy doesn't mean that the Fed shouldn't be held accountable for its decisions, but it should be allowed, I believe, and many central banks believe, to set that policy independent of short-run political considerations. And what we're seeing, or what I'm interpreting this, what we're seeing is that there is a real risk to that independence.
Loretta, I feel like as citizens and investors, today people have some pretty basic questions, Loretta. I mean, they're asking, listen, is Cook at work? If she tried to get to work, would she be allowed to get into the building? Pretty basic stuff. Would you expect that we get some line of sight, some clarity here, Loretta, on some of these questions?
I think not, because, it's like any business. You don't necessarily put out that kind of personal information on one of your employees about their whereabouts. And I think that that's kind of, yes, there's that kind of question, but I think the bigger question is really, what does this mean in terms of how the Fed is perceived? And the danger here is, even if the Fed continues to go about its work as it will, in terms of making sure that it's doing what it can to set policy to achieve full employment, maximum employment, and price stability, there's now a perception that they may be influenced by other considerations. And that's why this is a difficult situation for the Federal Reserve, right? Some of their credibility is going to be affected just by the perception that they may not only be setting policy in the appropriate way to achieve those goals. And that means it could result in higher long-term interest rates, something we know the president has stated he does not want. But, if the markets and other investors begin to question whether the Fed is actually setting policy independently, that could very well happen. The value of the dollar might continue to decline. Right. So it really undermines the economy, and it undermines the economy and hurts the American people. If there's questions about inflation, maybe the president wants low interest rates in order to finance the public debt, which he has stated that was one of his goals. That's inflationary. That hurts the American households and businesses. So again, this is could be very damaging to the American economy and to households and businesses. And that's why this is it's a bigger thing than any one individual. This is a potential threat to how monetary policy and the Federal Reserve as an institution sets policy appropriately. And that's why it's dangerous and could potentially be very bad for the American public.
Can you think, Loretta, of any other examples that mirror what we're seeing right now between Trump and Cook, or are we in uncharted territory here?
Well, we certainly have seen presidents try to influence monetary policy. There are a lot of examples of that from both Republicans and Democrats. Typically, what they want is to see low interest rates, and the timing is usually in an election year so that the economy looks like it's very strong going into the election. And certainly in the 50s, that was when we sort of got to a point where there was this agreement between the US Treasury and the Fed that the Fed would run monetary policy and the US Treasury would not force them to peg interest rates at a low rate. But since that time, this has been the most egregious and aggressive attempt in certainly that I've seen, and historically, I think at least for since the Treasury Court in the 50s, to try to influence U.S. monetary policy. You've seen it in other countries, of course, and it usually turns out very poorly. And that's what I think the concern is here. Now, there's a lot we don't know, and I think, sending it to the courts, they're going to be the ones who have to decide whether, um, you know, the president has the power to do this or not. We don't know any of the facts, right? We know there's allegations, but as far as I can see, there's nothing that really gives us sort of an evaluation. But by putting out, I'm firing Governor Cook, the president has sort of circumvented the due process way of going about when these things have come up in the past. And of course, the Fed has had cases where they have had, someone alleged that there were improprieties in investments of some of the members of the FOMC. And of course, those were looked into. So there is a process that should be followed. And that process was sort of set aside, and we went to this very aggressive potential firing by the US president of a governor. And that, I think, is not a good procedure for this to happen, right? When questions come up, it should be evaluated, and it should be looked at and taken seriously. And Governor Cook, in her initial communication, said that she does take this very seriously. So I don't think there's any question of that. But this ratchets it up in a way that I have not seen, and we haven't really experienced before, at least within the Federal Reserve context. I mean, we've seen it, I think, with this president in other parts of the government, but not at the Federal Reserve.
And Bloomberg, Loretta, does have some headlines here. They have a statement from the Fed saying the Federal Reserve will abide by any court decision, that governors may only be removed for cause, which is what you were just talking about there, Loretta. And that is listen, as we try to figure out whether Trump does have the legal authority to do this, that seems to be the debate, Loretta. We have to define what cause means here.
Right. And that's what the courts are going, I mean, that would be what the courts would do, right? Not everything is specified, right? So the law says for cause. Now it's up to the court to interpret what that for cause means. And we saw an earlier Supreme Court judgment about independent agencies and what can and can't. And in there, they talked a little bit about the Fed, and saying the Fed is special in some way. This will now be the courts will have an opportunity to define or interpret what cause means. And of course, I'm not surprised that the Fed will abide with what the court says. It is an institution that really does value, following the law. And so I'm not surprised at all that the Fed will follow the law.
Loretta, great to see you as always. Thanks for joining us.
Thank you.